Let's take a look at some setups I'm watching for the week of October 12th. Now, these setups look familiar to those who are long-time listeners to this two-part series. We have BTC USD on the left, ETH USD on the right. Taking a look at the Ichimoku cloud, which is a system that provides dynamic support and resistance levels, allowing any trader to easily glean immediate entry signals, exit signals. Doesn't tell you targets though, we'll get to that. But the key things for the cloud here, this is a once a quarter entry for both BTC and ETH. Both BTC and ETH were inside of the cloud, which is a no trade zone. Over the past few days, BTC has exited above the cloud, which is a bullish long entry signal. ETH is actually lagging slightly over the past few days, but it is now also showing a bullish long entry signal. So for both of these charts, the last thing you're waiting for is this bullish TK cross, which is the blue line over the red line, which you can think of as a 20 and a 60 moving average. It's not exactly the same, but the concept is similar. You want the fast moving average to be above the slow moving average. Down the line, a few days from now, you also want to see some diagonal push, some increasing momentum in the cloud, and the Kijun in the red line here. You want everything to point up gradually, much like it did here for ETH. The TK lines tight together, cloud small, thin, vertical increasing. That's what you want to see. When everything's flat, it says there's no momentum, there's momentumless. Price action, there's no trend, it's going to be a mess, which it has been. The cloud is telling you that. It's telling you it's in the cloud. Anything can happen in the cloud. Once we're out of the cloud, boom, trend is established. So right now the expectation is both BTC and ETH go higher. How high do they go? What can you look at? Well, we can look at Fibonacci extensions. We can take the most recent local high, the most recent local low, pick those 2 points, and we get a projection of, for BTC, 13.7 to 14.6, which is the 1618 fib extension to the 2x price extension, or the 2 fib, however you want to say that. This will give you a range just based off nothing but Fibonacci levels as a possible resistance zone if we go higher. For ETH, same thing. Local high, local low gives you a projection of 580 to 644. These are unfeeling, non-emotional levels, just purely based on math. Do they sound absurd when you think about it? Yeah, they do. But the fibs don't care what you think about the levels. They don't care that they sound insanely bullish. They don't care that it's 3-4 year highs for ETH, whatever it is in this case. At least 2 year highs. It doesn't care that BTC hasn't really been at 15K ever, for the most part, really on any weekly basis. But these are the levels where you can say to yourself comfortably, okay, we're probably at a decent sized maximum for the move, for this specific move, for the impulse of this move, however you want to think about that. That, okay, maybe I should take some off the table here, depending on your leverage, your size, your risk, whatever. We can also look at what's happened with other bullish Kumo breakouts over the past 2 years, year and a half, whatever it is. So again, this is a once in a quarter entry signal. These don't happen every day, which is another reason why I love the cloud. I love the system. We've had 1, 2, 3, arguably 4 of these types of trades for BTC since 2018. So these don't happen often. So what do you do? Let's just look at them. What are the percentages that they've increased? 160%, 19, 40, and 35%. Let's throw out the 160%. We'll say, you know what? That was an outlier. Let's just be as conservative as we can here with the targets. If we measure 20 to 40% from the cloud, from the breakout, we get targets of 13 to 15. Not too crazy. Again, very similar to the fibs. 13 to 15. That's a level where you can say to yourself, all right, this is a decent expectation for this price move, for this price reaction, based on previous moves we've had that don't happen too often. ETH, same thing. Very few of these type of entries since 2018. 4, in fact. ETH is a little different than BTC in that it tends to have no chill, because once it starts to go, the leverage on ETH, because of DeFi, because of the supply being locked, because of ETH in mass being sloshed around on chain, it tends to have more velocity. But again, let's throw out these 100%. Okay, let's say that those returns probably not going to happen this go around. Let's just be super conservative. Let's measure 30 to 60%. What do those levels look like? 500, 600, decent target. This isn't necessarily today or tomorrow for any of these targets. This may take 2 months to play out. But the expectation is there because of the previous moves and where they've been. And again, if you compare that to the fibs, it's not too crazy. So all of this TA stuff tends to echo itself, no matter if you're looking at highs, if you're looking at lows, if you're looking at trend, if you're looking at MAs, if you're looking at cloud. All of it generally comes to the same conclusion. But all in all, again, this is not an entry you see often. And this is an entry that is typically extremely bullish for both BTC and ETH. Which is why they are the setups of the week.